Well, 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 the Fed day, it came and passed. The S&P 500 crossed below a pretty key level, so it's going to be important to watch this throughout the week to see if we actually close and hold below the 5 EMA, which is currently sitting at 4109. So watch for price to close there at the end of the week below 4100. Could be pretty bad there and potentially even come back into retest the 50 weekly moving average, which is right at about 39.50, 39.60. Now, what happened today at the press conference? Fed Powell said the banking system is sound and resilient, even after the First Republic failure. Yeah, that's exactly what he said. And needless to say, all the banks had a horrible day. The regional banks had a really, really bad day. And even in the after-hours trading session, we're seeing stuff like PacWest Bancorp down 52%. We saw Western Alliance down 23%, and there's a variety of others that are down tremendously in the after-hour sessions. If you take a look at KRE, it's been down another day of distribution to the downside, closing at the low of the day. Are we finally moving into some capitulatory type of volume where we might go back again, go into a sideways consolidation? Or is Jerome Powell going to step in and, do something about this? It didn't seem like he did. I mean, he did say that if inflation stays high, we won't cut rates. He was pretty strong about that. And while inflation is still high, yeah, it's coming off. But to what extent and what's the pace of that? As it stands right now, I mean, we're still sitting at, high inflation, core inflation since, the early 1990s. And he has a target rate of 2%. He was even asked, hey, what is it going to be like if we come down to 3%? And he said that, well, that's not our target, goal. We're not going to put away the tools if we're at 3%. We have a target of 2%. Now, even though that they raised, obviously, 500 basis points. What is the market as far as pricing and looking forward? Well, June, right now they're looking at a target rate of 500, 525. So there's a 76% probability the market's pricing in that the Fed is going to hold rates where they're at. Okay, so that means they're going to pause potentially. And does the market really believe Jerome Powell, big old Jerome Powell, when he says that he's not going to cut rates? And the answer is no, they don't believe it at all with almost 100% probability. You can see if you just go to December, that's the last meeting of the year, there is, count them up, right? 10%, 42%, 36%, 10%. And that's saying that we're going to be at, a probability of 450 to 475 all the way down to 375 as probability. And the chances of being at 500 and 525 are pretty much, they don't exist. Okay, so what it's saying to me here is the market doesn't believe him. And you got to be a little bit worried here because if that is the case, well, why would he be reducing rates? What's going to happen in the overall market to force the Fed's hand? And I don't have an answer for that, but we are seeing the markets respond quite poorly. Now, not to get all bared up here, all right, because really the market hasn't done anything, right? We're pinning between 4,100 and 4,200. We're back below that 4,100, which does open the door down to that 4,000 to 3,900 range because we've been in this building open interest, right? It's getting tight, and then we started seeing more like larger swing moves, larger volatility, preparing us for a potential bigger move outside of this range, all right? If we take a look at something like ES, we have the upper expected move for the day at 41.30. We have the lower expected move on the day at 40.44. And you can see that there's actually, after the market closed, we actually have a pretty large order sitting here at around 4,000 and even over here at 40.50. So those levels are going to be interesting ones to pay attention to going into tomorrow's trading session if we break down through that lower expected move right there. Now, what did gold do? Gold was up on the day, right? It seems like another flight to safety. It's even up more in the after-hour session. Bonds were up even further. I was buying right around here. I've been trading it for some time now, but I bought some. I sold some about here, and then I sold a little bit more, probably right around this range over here. just to reduce some of the exposure because it's already been a pretty nice move. But I plan on entering more if we start getting further breakout, right? Like I've been saying, I think that we're in stage 1 of the business cycle, and that's where bonds start to move up, commodities and stocks go down. And you could see here, if we do stage analysis, not the business cycle as far as cycle analysis goes, but you could see stage 4 decline. We're starting to potentially accumulate here. So if we do start breaking out further and the moving averages start to, spread out and go like so, and price starts to boom, 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 it looks like we could be in a stage 2 markup in bonds. What else got hit? I mean, commodities got absolutely crushed, down another 4%, right? This is, sorry, not commodities, but a commodity, oil, which is one of the largest components of the CRB index, right? We had that big move up. All the energy bulls were like, yay, see, I told you it's going to be crazy. And then it hit the 200-day moving average, and it's been capitulating to the downside just pretty hard right now. So yeah, another 4% drop there in oil. Now, if we take a look at the daily time frame for the S&P 500, I haven't showed this chart for a few videos, but I want to just reiterate this now. There's a couple of levels on the screen. This one right here was the high of year at 418.31. This right here was the low of year at 377.83. And then right here at 384.37, that's the open price of the year. So we had this rising wedge structure, and we never broke out, of this high. So I still think that, hey, where's the risk? Where's the reward? Well, when I look at this, I feel like the reward's more towards the downside, where the risk is more to the upside. Now, that can change, right, if we start building up a little bit better of a structure here and tightening up, and then we start breaking through 420, where we can start looking at 430. But as it stands right now, I mean, this looks like some distribution that's going on, right? We have some wild moves back and forth, and we're starting to see stronger volume days on the down days, just adding to the amount of distribution days that have been building up, which is not necessarily a great thing. Now, if we take a look at the 15-minute time frame on the SPY, you'll see here that we closed under the weekly expected move. And remember, 68% of the time, it closes within the weekly expected move. So we're outside of there. So we got to be a little cautious given the context of the market, because if we continue to push outside of this and you start to see large volume spikes, well, that could be dynamic hedging taking place where we get more selling into selling. And if we do, where can price potentially go? Well, this would be a very critical level to watch, 404.29. That is the daily expected move going into tomorrow. And if you bring a line to the left-hand side of the screen, what you'll see here, that actually lines up with a gap fill. So if I were to make this here and it says GAP, that's the gap. These windows, right, sometimes when they're filled, they can act as levels of support. So not only will we have that as the daily expected move, but a gap fill could potentially be an area to watch for a potential bounce back to or around the weekly expected move. So be on the lookout for that. That'd be a pretty wild move. This is a large daily expected move, so the market's pricing in a lot of volatility. Even today, when I take a look at today's price action, we didn't actually tag a daily expected move. One other thing that you can do that can potentially help you out is anchor a VWAP to the Fed decision candle, which was 11 a.m. PST. You got to look at your time zone if you're not in the same time zone as me. But if you anchor a VWAP to that, watch for price to start to get back above that level, which could be a positive sign where we can see more of a bounce take place. Overall, the bears are back in control as it stands, right? We're back below the 5-day moving average. It's still inclining. So even on a bounce up, watch for this to start potentially turning itself over like that. And it could potentially act as a level of resistance moving forward. And then also obviously watch the week to date, month to date anchored VWAP as that's starting to come down too, which we discussed yesterday, right? It held as a resistance here. And then you could see price didn't actually have a 15-minute close above it. It tried to get there a couple of times and then it was rejected and started pushing down further. If you take a look at the Qs, it's the same story. We broke down from the 5-day period moving average. We're below the week to date, month to date. We did start squeezing above there a little bit higher, but you can see after the Fed came out, it was just a lot of volatility back and forth, large range candles, and then a decisive move lower. And that kind of really came when this news came out where he says if it stays high, we're not really looking to cut rates. And we kind of knew that. That was the base case, right? He said that on the prior meeting. My base case is that we're not going to be cutting, right? That we're going to hold rates higher for longer. If we take a look at a couple other things, we have the summation index for the NASDAQ. It's still down there below zero. The parabolic star is above it, so that's not a positive sign. So that identified a potential change in trend, right? Or a period of consolidation, right? If you just look at the line chart right here, I mean, it doesn't look too bad, right? You have a low, a higher low. It's tightening up here. You have, this clear pivot area. It could be an ascending triangle when you look at it like this. But remember, expansion, contraction. Now, what happens if we start expanding again? Well, watch for a break to the upside, or we can break to the downside, and that can cause, obviously, more volatility in a bearish direction and or a bullish direction. So we still got time here. The bulls still got time, right? And the bears, I guess, we've just been going sideways. If you take a look at the summation index for the NYSE summation index, the New York Stock Exchange still identified a potential change in trend. It's working out so far. The NYMOT, the NYSE McClellan oscillator, is still below zero. So that negative divergence that we've been calling out, where you had a higher high here, lower high there, it is playing itself out to the downside as it stands. We are above zero, so that's a little bit more positive in this, but it is pointing straight down. So the trend looks like it's going to be hard to, in a single day turn back around. So it's going to might take some time here to do whatever. Okay. If we take a look here at the NYSE advanced decline line. This is an important one, in my opinion, to pay attention to because it's worked pretty well. If we take a look at this red box, clearly it acted as a level of support multiple times, right? So support, 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 support. Then it broke down, and then it held as resistance. And then it held as resistance, and then it held as resistance. And you could see price really kind of followed that same kind of story there. And up until recently, what you see here is the advanced decline cumulative line will have a low, a higher low, and a higher low, and it's really holding this trend line right here, kind of forming this descending, broadening wedge pattern. And during that time, you actually had price put in a low and a lower low, so the internals were telling us that, hey, the market might push higher, and it did push higher. But I just want to call out that it is kind of curling itself over, and my thought here is if we start breaking this trend line, that could spell out some trouble for the broader market, and that could tell us that we're going to be potentially going lower in the near future for the New York Stock Exchange. So that'd be another one that I would find important to just monitor and keep a close eye on. Last thing we'll touch on is the zones. So where are we as far as the S&P 500? You have the high level is at 4184. The low is at 4053. Okay, and what's it telling us as far as price goes? Well, we have about 2.3% upside, about 1% downside. So we're at the lower end here. We're below the middle of the range. The middle of this range is at 4118. If you take a look at the VIX, well, the VIX shot up, right? So there's limited upside in this zone and versus how much downside we have. And then you can see as this happened, things started to light back up green again. So many of the obviously sectors and stuff that are listed here are getting into those oversold conditions, meaning they've sold off. And as we've stated previously, when things get like this, it's not really the time you want to necessarily short. You want to short if you're bearish when this is actually lighting up red, right? If it's a bearish trend. And then if it starts lighting up green, it's where you want to start looking to cover some of those shorts if you are shorting. So it's something to pay attention to moving forward. I give these, by the way, update them daily on in my Patreon group. I don't do it in Patreon. I do it all in the Discord, but you need to do it you have to sign up through Patreon. It's $9 a month. And then you sync your Discord to it. And that's where I post everything. But I also post trade ideas. I do watch list. A lot of the trade ideas this last week were all based around gold mining stocks because they were setting up very nicely and a lot of them took off. So if you are in those, make sure to update your stops or your risk parameters so you don't have winners turning into losers. You also get the daily expected moves, weekly expected moves, monthly and quarterly expected moves I post. And then obviously the zones is not just this, but I post a whole array of stuff there too. And then if you like my stock market indicator charts that I talk about on the show, I have permalinks to all of those there too as well. And then the best part about it, you get access to the community, good group of traders in there. That's all I got for you on today's episode, everybody. Have a wonderful night. See you later.